Let's go to real estate. This is a really interesting look, one that we've, of course, been trying to keep an eye on. We referenced yesterday a whole segment about the economy and how a potential crash could come. But also, you can't underestimate the greedy heathens on Wall Street. Let's go ahead and put this up there on the screen. Currently, Wall Street, while simultaneously facing a debt bomb in terms of commercial real estate, is now raising billions of dollars in funds to target, quote, assets with slumping values. So really what they're doing is that entire new hedge funds are popping up to try and acquire, quote, office buildings, apartments, and other troubled commercial real estate asset on the cheap at a fraction of the price that the investors paid just a few years ago. Why this is noteworthy is that many people who are on the bad side of the trade, even banks like Goldman Sachs who are holding a lot of commercial real estate debt, are now trying to capitalize on the fact that the debt might go bust to try and buy it and squeeze as much value out of this as possible. What they're saying is they quote several investment bankers and managers in the real estate funds, and what they're talking about is that they're trying to target the most troubled real estate market that they've seen in decades. The thing is that the original bad real estate crash happened in the housing sector, in the personal realm. This one being entirely commercial, they're now looking at it for vultures. One of the reasons why everyone should care about this is, note, I didn't just talk about office buildings, boohoo in some cases for office buildings, although, there's some relative like mom and pop-ish type people who do run those. It's really apartment buildings. If a lot of these apartment buildings continue to get scooped up by these big hedge funds, they're going to try and squeeze even more of the value out of that as possible. That means they're going to lower services, they're going to jack up rents, they're going to continue to make sure they use zoning regulation and all that to make sure that their premium remains high. So we should not be cheering, distressed assets being purchased by a bunch of Wall Street funds and billionaires just because some people on Wall Street will lose some money on one side of the trade. Other people are looking at this as a major, major opportunity to come in and buy.
Yeah, no, that's a really good point. And it's something we've covered on this show. When permanent capital ends up being your landlord, oftentimes the results are completely disastrous. Many of these companies use algorithms to jack up rents the absolute maximum amount that they possibly can. So they're running software programs, and what they found is that it's worth it to actually price people out of some of their apartments in order to extract the most rent out of the tenants that they do have that are able to afford it. So that's one piece of it is, jacking up rents to astronomical rates. And when you have, the same permanent capital institutions owning many of the apartment buildings in one town, then they basically get control over the market and they have market power to set what the going rate of rent is to start with. So that's number one. Number two, there's all kinds of reporting also about how, they look to cut costs, of course, in every single way possible. So if you've got a problem, if you've got mold growing, if you've got a plumbing issue, if you've got peeling paint, whatever it is, very unlikely that they're gonna hop to and take care of the issue or do it in any sort of a really, effective and sustainable way. So that's another piece of this. And then bigger picture, in terms of the economy, we've been covering this commercial real estate potential debt bomb for a few months now. And the trend up to this point has been that the people who own these buildings have been holding out in terms of selling, hoping that things turn, hoping maybe interest rates come down and they can, refinance, hoping that something will change so that they don't have to sell at what are rock bottom prices. And the early indications from this report is that that phase seems to be ending. And now the phase of people being forced to sell at, extremely low valuations is here. So that marks a real turning point in the market. They give an example. An owner of a downtown San Francisco office tower unloaded the property for $41 million to a large developer, Presidio Bay. The seller, Clarion Partners, had purchased the property for $107 million in 2014. So back in 2014, this thing at market value is $107 million. They just sold it for 41. I mean, that just getting... Granted, San Francisco is one of the hardest hit markets in the entire country in terms of vacancy rates, et cetera. But when you look at those kind of valuation crashes, it's a scary scenario in terms of what some of the downstream effects of that could potentially be.
Yeah, I agree. And it's if you put it together with some other things, there could be a potential benefit here, as long as some of this gets converted to housing. I did want to give a rare shout out, I think, to Mayor Eric Adams, but a new program, which I am definitely supportive of. Let's go ahead and put this up there on the screen in New York City. Adams has now unveiled a proposal to convert vacant offices to housing through a city action called the City of Yes plan. So basically, the plan that Adams has laid out is that they're going to take multiple neighborhoods, mostly in the Midtown area, that are the most empty. They're going to fast track regulatory approval and keep out some of the housing problems that have plagued New York City, rent control, all these other things that have kept the housing stock particularly low and not growing over the last couple of years, and immediately convert, issue permits for construction, reorganization, and turn these places into housing. $24 billion currently being appropriated for affordable housing as part of the program. But I do think that there are a couple of things that we have to at least shout out. From what I have read, one of the biggest issues in converting office space into housing comes down to like window space, lighting, and the inner areas of these buildings would basically have to be converted to more communal type areas where you wouldn't actually be able to use the majority of some of this real estate as housing. It's really the outer rings. So the construction cost of conversion is a lot higher than people think. It's not just, you can't just plop an office building and plop a bunch of apartment buildings inside and be like, yeah, go live in a box with no light in it. I mean, I'm sure New York City would love to sell that to you, but I think legally they're not.
I have to think plumbing is an issue too, because in an office building you might have like 1 or 2 bathrooms on the whole floor or whatever.
There's a lot that goes into it.
Yeah.
That said, it's an innovative plan and I like it. I like at least the thinking of like, hey, let's do it. You know, we got one of the most expensive housing markets in the entire country, and one of the reasons why I think it's important is Manhattan has 2 paths. They can either go down this and actually make it a place to live, and I know a lot of people who are young and they love it there. Even now, my own sister lives there. The issue though is it's exorbitantly expensive and continues to be so.
Yeah.
Rent increase there is like 30–40%, and the only other avenue that they had in order to raise the tax revenue was to basically make it even more of a playground for the rich and just make it the ultimate party destination for people who want to stay out until 4 a.m. or whatever.
That was the Bloomberg model.
That was the Bloomberg model.
To like intentionally make make Manhattan a luxury good.
And it worked, and they made a lot of money. But then a lot of those people with money moved to Florida during the pandemic. So now what? You know, it's like, it turns out that these people are very fickle. Getting roots and actually turning it into more of a place that you can live. That's one of the original conceptions of New York. It's like the original thing that people who grew up there really feel attached to. So I did want to shout out this plan because I think it's a good idea.
Yeah, I mean, I lived there for a number of years and I loved it. I mean, it took me a while to get used to the just because I'm from the country and it was like a whole overwhelming experience. But once I did, I really did love the energy of living in Manhattan. So, you know, to have any sort of attempt to keep the vitality, restore some of the vitality, make it a place that young people or families potentially could live, I think that's really good. I do want to say I think there's a lot of limitations here because all they're doing is they're changing some of the zoning regulations. I'll read you the specifics. They say they're going to make it so that buildings that were built as recently as 1990 could be converted to housing. Right now, I don't know why, only buildings built before 1977 or 1961 are eligible, depending on where they are in the city. So you can see there's like a tangle of zoning regulations that make this difficult. And the city would also allow buildings to convert to housing anywhere in the city if the zoning regulations already allow for residential. So they're making some zoning changes here, but I think it's a very difficult thing for any city to really accomplish on their own without state or federal assistance. There were a number of efforts. Also, I want to be clear, this still has to be approved by the city council, so this isn't even a done deal yet, and housing issues are always incredibly sticky, so we'll see whether it actually even passes. There were several plans put forward at the New York State level, pushed by Governor Kathy Hochul, that failed, that would have provided some financial incentives for developers to make these sort of expensive, costly conversions from office space to residential. So those failed. So there's no money involved here. And as you're pointing out, Saagar, the conversions are very expensive. So we'll see if the math ends up working out, you know, for this to actually shift the balance here whatsoever when you don't have state or federal money backing up an attempted transition. My guess is it's probably not really going to be anywhere close to sufficient to induce developers to do what you want them to do, but it's an experiment. I appreciate that they're trying, and we'll keep an eye and see if it works.
Let's try it. If it fails, so be it. But right now it's a crisis and it's not working. So let's continue down that, and I'll continue to try and at least give credit to people who are trying something innovative and interesting.
Hey guys, if you like that video, go to breakingpoints.com, become a premium subscriber, and help us build the best independent media organization on the planet.
That's right. We're subscriber funded. We're building something new. We want to replace these failing mainstream media organizations.
So again, to subscribe, it's breakingpoints.com.